Hi, my name is Sara Gelsheimer, and I'm a Senior Wealth Manager at Plancorp. And I want to talk about an interesting strategy called intra-family loans. So, as the name implies, an intra-family loan is loaning money or lending money between two family members. So, most often this involves a parent lending assets or lending cash to a child for a big purchase, such as a car or even a house. And there are a lot of benefits to doing an intra-family loan. So first of all, it can really benefit the borrower, especially if they have poor credit, because they don't have to go to a normal lending agency and pay, of course, the associated lending fees. Secondly, it's also beneficial from the parent's perspective, especially if this cash were just sitting in a bank somewhere. So a couple things to keep in mind when you set up an intra-family loan is, first of all, you must document the loan. Secondly, in order to avoid any kind of gift tax issues, there is a minimum amount of interest you need to charge. And that's based on what's called the AFR rate, the applicable federal rate. And right now, for example, a midterm loan, which is anywhere between 3 and 9 years, that midterm rate is less than 1%. So you could charge a family member that amount, about 1%, in order to not have to worry about gift tax consequences. For a long-term note, so that's anything above 9 years, that current AFR rate is just under 2%. So again, for a family member potentially trying to purchase a home, they could do a 30-year intra-family note for less than 2%, which of course is far better than what you can get in the market today, even with interest rates as low as they are. So again, document the note, make sure you're charging that minimum rate. Another thing to keep in mind is that if you did use the funds to purchase a home, that loan actually needs to be recorded as a lien on the property in order for the borrower to be able to deduct the interest expense on their tax return. And conversely, for the lender, that interest you're receiving needs to be reported as income. So these are a few considerations to think about. Certainly, if you want to explore more, I think this might be a good route for you. Feel free to reach out to me. I think it's a really great strategy, and I've seen lots of families take advantage of it. So I hope you find this helpful as well. Thanks.